I'm here at the FT's Cybersecurity Summit in New York, where I'm discussing the cybersecurity industry and the amount of money flowing into it from venture capitalists. Ted Schlein from venture capital firm Kleiner Perkins is here to talk to me about this. Thank you very much, Ted.
Sure, Hannah.
So, last year, I think we got to about August when the amount of VC money flowing into cybersecurity startups already overtook the year before, and that pace doesn't look like it's slowing down. Is that all in anticipation of an M&A boom?
Well, there has been M&A and there's going to be more M&A. It's also indicative of the fact that you even had two startup cybersecurity companies go on to become public companies worth a lot of money, in Palo Alto Networks and FireEye. You have a Mandiant that was acquired for $1 billion. So it's interesting. In the world of security, there typically ends up being a few big winners, and then there's a lot of innovation that gets done, and a lot of times they get gobbled up. And so, yeah, I guess that's probably in the back of everyone's mind.
Is this sort of plethora of startups partly because the older companies, your Symantec, your McAfee, have kind of failed with their antivirus software not stopping the threat?
Well, let's just say that possibly the installed base, the entrenched guys, haven't been the most innovative and the fastest on their feet in that innovation. Not too dissimilar from other marketplaces. But in the world of security, customers are willing to spend money on the new shiny penny. Probably more so than almost any other industry, because they don't want to be caught flat-footed. You cannot be allowed to be less secure. So you will buy from the new guy. And a lot of that new innovation and new technology is not coming from the entrenched folks, which is leaving that opportunity open for venture to fund some of these new entrepreneurs.
Now, overall, budgets for cybersecurity are actually flatlining as a percentage of IT budgets. But, of course, there are areas where they are buying, as you say, from the new guy. Who are the biggest buyers from these startups?
The financial services industry has always traditionally been a huge buyer of security technologies, and I would guess their budgets actually have gone up quite a bit.
Yeah.
So there may be some other industries that offset it, but you also have insurance that's spending a lot of money, healthcare. You've seen the healthcare industry spend a lot of money, so pharma, and so these guys are spending in order to secure their systems, and I don't think that's going to slow down anytime soon.
And so, what do you think are the most exciting areas for startups? You must see, tens, 20s, hundreds coming through your doors every year. How do you choose between them, and what do you think is most interesting at the moment?
Well, I think that we're going to have to figure out a way to encrypt information in the cloud. I think people have wanted to figure out how do I make clouds safe and secure. So, and I think it's going to be done through encrypting information while it's at rest in the cloud, encrypting it while it's in transit, and highly authenticating the users. And I've been working on a company called Ionic Security to do something just like that. So it's a big, bold company. It's a hard one to actually make work right, but it solves an enormous need. And that would be one example. I also think you're going to see a lot of technologies that get down to how do I detect a breach, which is very different than preventing a breach. Preventing a breach assumes you're going to stop it. Detecting it means it's going to land, and I want to find it as fast as humanly possible, contain it, and then remediate it. And you can see a lot of investment in technologies to do that, and some of that will be done through security analytics, some will be done through some new endpoint security technologies. So I think you see a lot of investment in that area as well.
And finally, I'd like to ask you whether you think there's a bubble in tech company valuations overall.
I think there's a bubble. I don't, the companies are far healthier today. Usually you get asked the question, you compare it to 99 and 2000, and the companies are far healthier today that are being built than they were before. I mean, they have significant revenue, there's significant opportunities, but I will point you to a few statistics which makes one pause. I think right now, in March of 2015, there are 78 private companies valued at $1 billion or more. There's 9 of them are valued at $10 billion or more. Private companies. And that's up from 2013, where I think there were 38 valued at $1 billion or more. And if you go back to 2000, there were 18 companies valued at $1 billion or more. Now, in 2014, 11 companies went public at a valuation of $1 billion or more, out of 100 or so IPOs that year. So You know,
you're
eventually,
saying they're not gonna
markets,
go public?
the markets need to stay vibrant and healthy for those investors that are investing at those valuations to get the kinds of returns they expect. Maybe that's going to happen, but you know, we'll see. I think those are numbers to at least keep an eye on.
Could you see people going public at a valuation which is lower than their previous private valuations?
We've actually already seen some of that. And the question is, do you see a lot of it or not? And if you end up seeing, you know, if that happens a lot, you're going to see a whole group of investors exit the private market, you know, that were making those type of investments, which maybe that's fine. You know, I don't know. By the way, it doesn't mean there's anything wrong with these companies that have gone public at a, you know, they were trying to be worth $3 billion and they were only worth, you know, $800 million. You know, that's still an enormous amount of value that's been created. And then they continue to grow into future valuations. But anybody that's investing at that tail end of this will have to watch out to see whether the public markets will be as accepting as the private markets have been on these valuations.
Thank you very much, Ted.
Sure.
I'm Hannah Kuchler for the Financial Times in New York.